Kwa lapi tuanze kuchambua.
Alright, so tutafanya the weekly market forecast cause jana sikuifanya. So we have to start with the economic calendar first. We start with the economic calendar first, and then we go to the technicals.
Technical.
Today was on Monday. Can see we had a bank holiday in Japan. Yeah, I can see today we had a bank holiday in Japan. So I've not checked on the markets today actually, but I believe the Japanese yen pairs were very slow. On the other hand, I can see we had a bank holiday in UK as well for the pound. On Tuesday, that is tomorrow, I can see we have another bank holiday in Japan. So the whole of Tuesday, there's no any important news. But we can check on, you can just keep on your eyes on the 10-year bond. What is going to be the outcome? Going to Wednesday, at least on Wednesday, that is on New Zealand, you can see we have the unemployment rate, unemployment change reports are coming out. So we expect something from that. Now, hey, Wednesday, 9 p.m. Here comes the man himself, Jerome Powell. The interest rates. So, as per the statistics, you can see the previous was at 4.5%. The expectation this time around is still going to be 4.5%. So, according to statistics, the Fed is expected to remain at the current rates, no rate hikes, no rate pause. But for me, I can have two options: either a rate pause or a rate hike. But I don't think I'll have an option for a rate cut, and I don't have a reason for that, because it has already happened for this for the rate cut expectation ahead has already happened. So let's wait and see what happens on Wednesday. So there's that high chances of a rate pause as well. And if the rate pause is going to happen, if we are going to have the rate pause, we will see that gold, you will see a buy on gold, and you will as well see the DXY going up. So there will be that kind of a reaction that is going to confuse many. But let's wait and see what happens. Most of the times when it comes to the interest rates release, it's better to wait for the press conference. First check on the FOMC release so that you can know what has come out. Then after you have known what has come out, you can now come back and trade during now the press conference. Because let's say at the release that is at 9, we are going to have a rate pause, and let's say gold has sold during that time. What will happen at 9:30? The press conference is going to act as fuel for that. So if the market would have retraced during the between the 9, let's say between 9:05 to something like 9:25, you can now take an entry on the same side. But just first do your observations before you start trading if you have not been trading the news. Yeah. On Thursday, On that day, we are going to have the monetary policy, that is interest rates. That is on the pound. The pound. So for the pound, you can see the expectation is a rate cut. But let's watch the first one, how it will go, because mostly these countries tend to follow each other. What the first country does when it comes to interest rates, we have the when you check well, you'll see the rest are going to follow the same way. So we'll first wait to see what the first one is going to do, and from that we can check what the other countries are going to do in terms of their interest rates decisions. Yeah. So let's check what else is there. As usual, each and every Thursday we normally have the unemployment claims, that is in the US. The previous was at 241. This time is expected to go lower, and if the actual is less than the forecast, actual less than forecast, that's always a good news for the US dollar. So each and every Thursday, make sure you monitor this, because it becomes a key factor to consider when it comes to trading NFP. On Friday, we are going to have a speech from the governor to the Bank of England. That will be at 11:40 a.m. For the speeches, as I've always told you, I don't like trading speeches, because you don't know what are some of the feelings if this person is going to give out this speech. So most of the times when we have speeches, just listen to that speech, because it's going to give you an hint of what you expect from that bank or the central bank, what they intend to do in future. Yeah. Later on at 3:30 we are going to have employment data release, that is in Canada. You can see the unemployment rate is at the previous was at 6.7%. They're expecting it to remain. That is now for the forecast at 6.7%. And basing our argument on what happened with the US, this might happen. We might see that. For the employment change, you can see previous was at negative 32.6k. This time expectation is at 24.5k. We might have an outcome that is just slightly higher than the forecast. So let's just wait and see. Let's wait and see what happens during that day. To take you back a little bit, I can check on last week. That is on Friday. I would like to talk something here. On Friday we had the NFP release. On Friday we had the NFP release. So I would like to say something here. Where is Friday? Where's Friday? Alright, here is it. Now, look at this. Average hourly earnings dropped. The actual came out at 0.2% and the expectation was at 0.3%. That is a negative news to the dollar, right? Then coming to now the non-farm employment change, which is now the NFP. The actual came out at 100 and what? 177,000 against what? Against a focus of what? 138,000. And then when you check on previous, the previous was at 187,000. So now, remember, as I've always been telling you, when we are dealing with the employment data, we have to keep our focus on the actual and the forecast on what? The forecast is also, you can as well term it as the prediction or the expectation. So now you can see the actual for the NFP was greater than what? Was greater than forecast, and that led to a positive what? positive dollar index. Now, coming to the unemployment rate. The unemployment rate remained unchanged. The unemployment rate remained unchanged. Now, basing your argument mostly on what? The average hourly earnings and the NFP. You saw what happened on Friday. The market sold. Then, today, even though I've not been into the market that much, I've seen gold has gone up a good number of pips. So, with that being said, that is all. That's all on the fundamentals. We can check on now the technicals. Can see someone's to join, but I can't see them. Guess is the boss kiddo is already here. So let's now check on what? Let's now check on the technicals and see what we expect from the market. We as well have sentiments. We as well have sentimental analysis where we have to check on my FX book, and other tools that can provide us with sentiments. If you remember the analysis I did, that was on last Sunday, or if you can go to our YouTube channel and check, you will see in the video this is what we had, and the market moved. The market moved for how many pips to this level? The market moved for 13,904 pips. 13,904 pips. Yeah, and I remember I gave that. I gave the entry, and this is what I used that day. This is what I had. If you remember well, this is what I posted in the group, this one. And with this one, what I shared, the market went for 12,170 pips, which was a good catch. On Friday, after the NFP I had given this buy, the market went up for, I don't know, was it around 140 pips, and then reversed and did our SL. But today the market went up. Well, currently gold is in a consolidation here, so I expect the market to keep going up. Let's just okay, I wanted to check on my FX book with you and show you something little. I hope you guys can see my screen. I hope my screen is visible to you people. I hope my screen is visible, my FX book. I hope my screen is visible. The purpose of visiting my FX book is for us to check on a few sentiments. So you just come on just a minute. So now, once you are in my FX book, you need first to sign up, then you will be logged in, right? So you come to community. Is it under community? Sentiment, yeah. Come to community, then go to sentiment. I'm sure you have all heard about the COT report, or the commitment of traders. That is what we call the COT report, commitment of traders. So let me allow for us to get a better access on the same. Okay, this one is going to delay us here. This one is going to delay us for long. So In the next meeting, I'll show you how to do that, but for now I can use this one. We said we go to community, then sentiments. Go to community, then you click on sentiments. Say that someone wants to join. Let me see who it is. Who wants to join? Someone wants to join. Okay, we are already in, so now once you click on sentiments, this is what now you are going to see. You can see this kind of data here. You can see like on Euro USD, the people who are on sales are 59%. The ones who are on longs, that is buys, are how many? They are 41%. So most of the times go against the majority, because you know the majority are always the retailers. So if you go against the retailers now, that means you're going with what? You're going with the big boys, the banks, the hedge funds, and the rest. So for the Euro USD, you can see most are on sales. So that gives us an hint. If we are looking for buys, we can at least be on the safe side. Coming to GBP USD, you can see it's 54% for shorts, 46% for what? For longs. The same thing that is happening on what? On the Euro USD is the same thing happening on the GBP USD, right? So now let's just go straight away to something to gold, because most of these pairs, you can see GBP USD, most of the traders are on sales, 41% are on buy. So if you trade GBP USD, when you go to technicals, there's high probability now you are going to be looking for your longs. Let me check on gold, and then now we can proceed to the technical analysis. Where is gold? Where is gold? Where is gold? XAU, GBP, XAU, USD, where are you? Alright, here we have gold. You can see 88% of what? Of retailers. That is gold versus Australian dollar. 88% are on shorts. Only 12% are on buys. And the 12% are the people who checked on this yesterday. If you follow well, are the people who got good trades today. You can see coming to XAU Euro is 51% against 49. I wonder the gold against the US dollar. Where are you? Gold, XAU USD. XAU USD. Let me see, where are you? Alright, here is it. You can see we have 66% being on shorts, only 34% are on longs. So I hope you guys can keep practicing more on this sentiments. Do your own research and see if this thing really works out, and then you can give or you can come with a feedback. So guys, let's get to technical analysis. And see what the charts got for us. So as I had just said earlier, this market played out very, very well. As I told you, the video is here. I'm not lying or saying things which I don't know what. No, we have the proofs here. And if you have not yet subscribed here, kindly just come and subscribe. The video is here. This was how many days? It was 7 days ago. Gold. Well, always been one of our, you can see this was gold and best. Give everything there. Market gives you a very suitable entry. Swing it. So what we had there is what has played out. Yeah, that was it. And head at 200 level. So just ask in the comment section Don't forget to. That was it. That was it. And yeah, everything just went out perfect. It's all about patience, man. It's all about patience. So let's check, or let's start with the dollar index, because dollar index plays a very crucial role here. So you can see from my analysis what were my expectations. If the dollar index was to respect this, here we had a triangle. This was a symmetric triangle. So if the market was to decide respect here, well, go up, then do a retest, we were to go up. But if the market was to break, which happened, it was to come to this level, and exactly that's where the market came. It formed a double bottom. I don't know whether you can see that W. The market formed this double bottom, which is in form of letter W, and then you can see how it has respected that analysis all the way to today. Now let's just get fresh analysis, guys. Let's get a fresh analysis. If I was just alone, I could not do fresh analysis, but because of you, I will have to do so. Alright, so we normally do what we call the top-down analysis, and in top-down analysis, we start our analysis from the higher time frames, dropping to lower time frames. And what I normally do is that in each and every time frame, number one, I have to identify the market trend. Number two, mark the key levels, the support, the resistance, or the demand and supply levels. And remember, imbalances also act as what? Support and resistance. So that's it. Now coming to the monthly time frame, we have this I. Sorry, I forgot to mention. I normally start by marking the highs and the lows, the recent ones. So that was it there. We had this for last month. I can mark it because it can be a point of interest in the current market. We had an imbalance here which the market has respected, so there's no need to have the zone and also to have the imbalance, so I can just have the zone alone. Now if you check, initially we had a support, we had a very strong support zone over here where the market is currently trading at or towards there. It depends on how you are going to draw your zone, right? So on the monthly time frame, these are now our points of what? These are now our points of interest, right? I don't see any other point of interest here. And as you can see, the market, if you check on monthly time frame, well, you will see the market has been a very strong uptrend. Currently what has been happening was a consolidation, and the market might have done what? Might have now grabbed liquidity here and ready to go up and grab the other liquidity over there. So we will be expecting more from the fundamental side. You can see we have a lot of liquidity here, both trendline liquidity and also the structural liquidity, where we have these single highs, yeah. And you can see the market made an impulsive move to the upside. So this is what? A bullish what? This is a bullish flag. So we can expect more to come. Remember, this is monthly time frame. So let's go to lower time frames. Let's continue digging lower and see what can really happen. Now for the people who trade what you have been hearing of the CRT, the candle range, you can see from the previous week, let me enlarge for you to clearly see what I'm trying to mean. Now this was the high of last week but one. This was the high last week but one. That was the high. What happened in the previous week? The market, the NFP week, right? The market did what? The market took out the high and gave us now a new high, which is what I've marked over there. And then I'm as well going to mark out the low. Now remember, we are on Monday of this new week. You can see today the market dropped. The market dropped all the way to this level. it failed to to break what? To break or to take out the low, but now is pulling back. So what is there, or the high probability is that now the market is going to pull back by Friday and close above last week's what? Last week's high. So that gives us now an hint that we have high chances this entire week we are going to experience a bullish dollar index. And also now adding, we have an imbalance at this level, right? That is the 100% of the imbalance. We can as well check on where we have the 50% of it. We should not ignore that, because remember we have had on the monthly time frame, this was a very strong support which was broken, and after the market breaks it, it becomes a what? It becomes a resistance. So the market can as well come and respect the 50% of it, right? So we have those as our key levels or points of interest once the market goes up. The first line is last week's high, the middle line is 50% of the imbalance, and the upper line is the 100% of the imbalance. So we have to keep our eyes at the 50% and also the 100% of the imbalance. This is weekly time frame, don't forget. So now let's continue digging deep down. Let's go to daily time frame and see whether the market has something interesting. Very nice. The more you are into the market, the more your eyes are going to be opened. If you just check on this market like I've done, I can clearly see the market giving what? An inverted head and shoulders. That's it. And an inverted head and shoulders is a buy signal. It's a reversal pattern. Now, checking on this, on the current market, what has been happening here at the daily, you can see we had an imbalance here. The market came here and respected it. Today, the market dropped. It never reached what? The imbalance or the respected what? The respected imbalance, and then it started giving a pullback. So that tells us we might have, or tomorrow we are going to see, we might see a very bullish dollar index. And also don't forget, we have a gap over here. I shared a certain link for you to go and watch about these market gaps, and also is it under liquidity. Let me just show you here. If I'm not wrong, on the channel you're going to check. Let me see whether it's here, so that you can just go and check on your own time. But I shared that link. For those who are serious, they have already watched it. For the serious people, I've already watched that. I don't know where is it, but I shared it. I don't know where it's it. I'll check and then reshare the link. I'll check and reshare the link for you to check out, so that you may understand these gaps well, the market gaps, so that you may understand them very well. So on daily time frame, what we have indicates that we are going to expect a bullish market. Then, as I've shown you, we have that gap, and the whole of this here is liquidity. So above that is now where we have what? We have another imbalance. This can be achieved. Maybe the FOMC can push the market. Yeah, FOMC can push the market to one of these levels, to the 50% or to the 100% of the imbalance, or even higher to this daily time frame imbalance. Anything can happen. So maybe if the market can be pushed to the 100% of the weekly imbalance, then retest there, we can have a very nice trade, like something like that. We can have a very nice trade. Now, let me show you what I was trying to say. If you check all here, if you check here, we have a lot of liquidity. Excuse. If you check here, we have a lot of liquidity over here, and then above the liquidity, you can see we have a gap, and also now we have an imbalance. So there's high chances that the market will be pushed higher, or will be, yeah, it is going to be pushed higher. It seems all right. So we are now on the 4-hour time frame. We are now on the 4-hour time frame. So now, like, if it's for the trend on the 4-hour time frame, is the time frame now where we can be able to plot or draw our trend lines to show the trend direction. So, but if you are good enough and you have mastered that, is not a must for you to draw. But if you are not that well off, you can do this. You can just plot them, yeah, and just leave them a little bit extended for future prices. Now let's check on the current market. Where is the current market? This is now where we have the current market. Remember, as I've always been telling you, the market moves in two phases. That is an impulsive move and a correction. After every impulsive move, you're going to see a correction in the market, right? And now, once you base your argument on that, okay, let me um, draw this about the market phases or the market movement. How the market moves. The market moves in two phases. The strong move, that's what we call an impulsive move. Then after every impulsive move, the market will now start consolidating. And now in the consolidation, that's where we normally get now the flags, rectangles, triangles, all those chart patterns, they happen when the market is in a consolidation after making an impulsive move or a strong move. So the market makes a strong move and then consolidates to gather enough liquidity or energy before it makes another strong move. So this is now how the market moves or plays. The market moves in impulse, the strong move towards one side, then consolidates. After the consolidation, the market will make another impulsive move. And now, maybe some of you might be stuck when it comes to entries. You should or you must get entries when the market is in the consolidation. Just look for the time when the market is now or gives signs of giving what? A reversal pattern. Like this, yes, let's say this is a flag. A flag is a continuation pattern. But inside the flag, the market will give you now a reversal pattern. Something like a double bottom, a triple bottom, inverted and shoulders. That is now where you can take your entry for the continuations of that trade. Now, as you can see, the market here, after this strong upwards move, the market consolidated and still it's in the consolidation. You can see after this strong move, that is now the impasse, the market has been consolidating here, and inside the consolidation you can see the pattern the market gave, which is a double what? A double bottom. So we have now high chances that the market is going to move higher and come to the, and as you can see, our trend line aligns with the 50% of what? Of the weekly time frame imbalance. So with that, I'm very much confident that DXY is going to buy. DXY is going to be bullish. Now we are now on the 1-hour time frame. Coming to 1-hour time frame, I know there's nothing much, but let's see. When you go to each and every time frame, just look if there are some adjustments you can make in your drawings, and yeah, if there is one, just do it. Now you can see from 1 hour the market has given a very clear double bottom, and currently here is where we have the market. Checking just below there, you can see we have a very strong zone over here. So the market has high chances of coming to that strong zone, which happens to have an imbalance over there. Before now we can continue going what? We can continue going up. That's my take on the dollar index. So let's wait and see how the market plays out. That is now tomorrow, and Wednesday as well, and Thursday. Then we end our week on Friday. So that's my take on the dollar index. Remember, when the dollar index is bullish, when the dollar index is bullish, DXY bullish, right, into buy USD XXX, they are as well doing what? Buying. E.g. what? USD CHF, USD JPY, USD ZAR, right? So what does that mean? If the dollar index is buying, any pair that has the US dollar as the base is doing the same. If it's selling, the same happens. And then the vice versa. The XXX USDs, they do what? They do the opposite of what the dollar is doing. So they are doing what? They are on sales. We have the examples of what? Euro USD, GBP USD, NZD USD, gold, that is XAU USD, and the rest. There are very many. I can't list all of them right now. And the opposite happens if the dollar index is bearish or is selling. The USD XX, they are going to be selling, and the rest, the XXX USDs, are going to be on buys. So let's move to GBP USD and then conclude with gold before we call it a day. That was my take on the dollar index. So I'm still bullish on the dollar index. Yeah, so if I'm bullish on dollar index, high probability is that I'm bearish on what? I'm bearish on GBP USD. So if you remember this trade well, you can see how the market played. The market respected our very nice entry over here, and the market is already how many pips down? The market is already 230 pips and above, 230 pips plus. If you just go and watch that video from last Sunday, you can see this analysis. You can see this analysis there. I had highlighted these liquidities here. I expected the market to take the liquidities, which happened. The buy side liquidity, I expected it to be taken out before now the market can come down, and that is what exactly happened. So let's do a fresh analysis and see what we expect from the GBP USD. And maybe someone might start asking, why do I only analyze these pairs? Because these are the pairs I normally trade. And yeah, and actually gold is one of the easiest pairs for you to trade as a trader. Gold is one of the easiest pairs for you to trade. In most cases, let's say like in this case, we are on the monthly time frame. You can see we have these equal highs. So in most cases, as you know, equal highs are liquidity pools or liquidity areas, whichever you're going to understand. As for that, in most cases, I like marking these levels with a rectangle. I like using a rectangle to mark these kind of levels. Now I'll come and mark the recent low. This let's say last month's high, if it was a little bit just higher than the highest high, I could have marked it alone. But since they are on the same level, that's why I have I've just marked them together, no problem. But you can see for the low it's alone, and also it happens to be what? To be an imbalance level. So that's very nice. Okay, I'm still going to mark this high. This is the high from the previous month, not just let's say last month, but one. This is now the high of it. So I'm going to mark it because it might be a very crucial point for us in a few days to come. The market might drop to this level, then say let's go grab this buy side liquidity over here, and then we can look for sell entries again around here. Anyway, that's one of the views. So on the monthly time frame, those are the key levels as for now. Let's go to weekly time frame. And see. Now coming to weekly time frame, you can see what happened in the previous week. in the previous week, the market took out that week's high, gave a new high, then dropped, but it failed to take out the low. All right. Now you can see what is happening currently. The market came to the last week's low, but failed to take out the low as well. So the market is just plain inside here. The market is plain. So we expect this market to probably take out the low, and if that one is to happen, we have another point of interest over here, which is now the imbalance on the weekly time frame. This imbalance on weekly time frame is very interesting, because by so doing, the market has an interesting pattern. The market is trying to show, if the market comes here, well and good, we will have an inverse head and shoulders. If the market comes here as well, we have an inverse head and shoulders. If it comes here as well, we have an inverse head and shoulders, which they all confirm buys. But for now, you can see how things are. Now, coming to daily time frame, one very clear simple pattern, that is a double top. Double top is very clear. But what is happening currently? The market is playing at the neckline. The market is now trading around the neckline. So we are waiting for the market to break the neckline and then give a retest. Now upon the retest, that's now where we are going to get our entries, which can push us to this level, right? Yeah, that's now what we are waiting for. So we will see how tomorrow candlestick is going to play out. We will see how tomorrow's candle is going to be. Tomorrow's candle might push this market to this imbalance, to this level. So there's high probability we are going to have that. Let's see on the 4-hour time frame. Let's see on 4-hour time frame. On 4-hour time frame, you can see the double top is very clear. Actually, you can see how clear is the double top on the 4-hour time frame. This is it. So let's watch out, because coming to 4-hour time frame, you can see this happens to be a very strong key level, a very key strong support zone. And again, on the 4-hour time frame, the market is giving us a different view. If you are that keen, you can see the market is trying to give us an head and shoulders. And remember, what is an head and shoulders? An head and shoulders is what? Is a reversal pattern. Remember, we have been on a bullish trend, so this is a reversal pattern. But we expect the market to take out this low, then retest before it confirms to us now this is what, that the trend has changed. So let's be patient and watch. Again, you can see the market made a strong move over there for sales. Then what is happening? This is a possible bearish what? A possible bearish flag over here, what the market is currently doing. So all the odds confirm sales. So, but this it's a little bit very tricky time, so I can't advise anyone to take sales. But if tomorrow morning you get the market playing around these levels, you can shoot your shot for sales. You can shoot your shot there and target this level as your exit, as we wait now for the market to come back up and give us clear entries. Currently you can see the market is on buy, so tomorrow morning if you get the market over here, you can take your shots. That is a 1.3300. yeah, 1.33. if the market will be at that level or around there, you can take your sales there, then have your target at 1.32, 3205. That's 95 pips. Yeah. So with that being said, on Gbpusd, I think we can proceed and conclude with gold. We can proceed and conclude with gold before we call it a night. I don't know whether we have anyone with a question concerning that. Anybody with a question? Alright, so if no one with a question, let's proceed to gold and then we call it a night. XAUUSD, XAUUSD, XAUUSD. When it comes to gold analysis, mostly I like using the forex.com, not the Oanda. So let's see what this gold are for us. Gold is one of the easiest pairs to trade, or assets to trade, or commodities, whichever name you're going to call it, but also is one of the worst if you take it reckless. It can take you on very fast. So if you are trading gold, you need to be very careful. Now let's just do a fresh analysis, because we had already did an overview of what has happened with gold. Now remember, we are still on the first days of the new month. This is the highest high we have had on gold. What happened with gold? You can see gold tried to do what? Tried to retest this last month, but once but it failed, which I still have high hopes that the market will come and retest that one before, if maybe it's going to go up before it goes up and gives us something like this. Don't be surprised to see gold come below this 2600, but first going to 3600. We first go to 3600, then come to 2600. Come to below 2600, but let's wait and see what happens. You can see gold has been very bullish. Gold has been very bullish, but we are now dealing with the current market. So let's check on them. Let's check on weekly time frame. Let's check on weekly time frame and see. Now, last week things went right. The market took out last week, but once low, this one, and then gave us a new low, and currently this is now also the high. Now if the market is to take last week's high, if the market is to go above 33, let's say 33.51, that now will have changed things. But currently with what is happening, if tomorrow now market will start dropping, and by the end of the week the market closes below this, everything will be according to my expectation. Below last week's low, you can see we have this kind of an imbalance over here, but I don't give much. I'll not give much weight to this, because of you can see we have these 3 equal lows there and stuff. I can give now weight to this order block over here, but first I'll wait market to drop below or past 3110 before now I can focus on this. Now someone who is very keen can see we have an head and shoulders pattern here by just using the candlesticks. That is on weekly time frame. Let's just drop to daily. Let's drop to daily and see. Let's drop to daily time frame and see what's the possibility here. Now, what caused the market to go up is this one. You can see the market respected this, and that's why you can see we have that strong move. Now where the market currently is at is also now another strong area of interest. You can see it's a very strong point or area of interest. The market, this one pushed the market here. The market has come to retest, and let me now show you the kind of head and shoulders I was trying to talk about, so that you are not going to be left in doubts and asking questions, what kind of head and shoulders is that? So this is it. I hope you can now clearly see the head and shoulders I was talking about on the weekly time frame. It's very hidden. If you're not keen, you're not going to see it. So currently this is what happening on gold. That is 4-hour time frame. sorry, this is daily time frame. You as well need to be very keen, because this can happen to be a what? To be a flag. And remember, a flag is a continuation pattern. So it can as well be a flag. So the market can break out, can just come up to maybe this level over here, and then give a retest, which will now give us an inverted head and shoulders, and then go up, take out this eye and give us a new eye, and then do what I mentioned on the monthly time frame. Yeah, so we have to be very keen. We have to trade what the market is going to give us. So coming to 4 hours, coming to these 4 hours, you can see the market here. We have a lot of liquidity actually, so the market might decide to go up and come to this 3400 levels, where we have now we have this imbalance, we have that imbalance, or the market comes here to this imbalance plus order block, where now it will have formed an inverted head and shoulders on the 4 hour time frame, and it can push it higher to collect this liquidity over here, come to this, before we get a sharp drop, right? Or it can drop and then keep on dropping. So it can drop just after breaking there, just give a retest, and then we keep coming down. For now, we have no clear entries, so we have to wait until the market gives clear entry points. Yeah, currently where the market is trading at, it's a very critical level because of this. Let me just draw it on top of what we have. Because of this, that's the current of the approaching level is very critical for gold. It might drop anytime, but we need to be very patient with that. We should not rush things. We need to be patient and wait for it. So yeah, so I'll be watching for gold at this level, that is 33, 34, 33, 34 to 33, 35 for my cells, to below 32.70. Let's wait and see. So guys, that's it from me. I don't know whether we have any question. So if no question, guys, we can call it a night. Kindly keep sharing our YouTube channel link to friends. Beginners will learn from that, because I've been uploading everything there for free, and I'll continue uploading that. Yeah, so guys, I wish you all a good night. See you next time.